Welcome back, everyone. Michael here with Offshore Citizen. Of course, there are always proposals for more taxes, and so today I'm going to give my view response on 6 of the proposed Biden tax increases. So yes, there are more than 6 in the tax proposals that he's put forward, but I'm going to respond to 6 of them specifically, tell you what I think, and so we're going to dive in. Before we do, if you haven't already, please hit the subscribe button, hit the all notification bell. If you would like these videos, see more of them, give it a thumbs up, hit the subscribe button, share it with your friends, and if you would like help with paying the lowest legal amount of tax possible, getting second residencies, second citizenships, moving abroad, etc., please reach out to us. You can book a call, calendly.com/Michael-Rodsmer, link in the description below, or send a message to our websites, offshorecitizen.net and offshorecapitalist.com. Okay, so let's go through a bunch of these proposed increases in taxes from the Biden proposal. If you aren't familiar with them, you'll find out, and kind of my views on them. So the first one is they're proposing, it used to be the top tax rate was 39.6%. This is federal. You can get state on top of that, so that can take you well over 50 in a bunch of cases. However, under the Trump administration, they lowered the top bracket to 37%. They want to bring it back to 39.6. I think it's kind of an interesting, 39.6 to me is a little bit of an arbitrary number. Not really sure how they get to that. It's a little odd. However, looking at it globally, compared to other, let's call them developed countries, this is not an insanely high rate. I mean, Canada's higher, a lot of Europe is higher, etc. Right? So, it kind of puts them in a not crazy level globally. So they can probably, from a tax competitiveness standpoint, get away with it, even though, should you do it? I mean, that's, I guess, you can kind of debate it. One of the things I think is worth talking about is, I think probably people might get the impression that I'm very anti-tax. I know I've had some discussions with people on Twitter, and they see some of the business that I'm in, et cetera, and they're like, oh, you're biased. And it's like, I'm actually, I think pretty reasonable about my position and understanding that, hey, listen, taxes are generally important for a functioning society, et cetera. What I have a problem with is, first of all, governments are going to spend the money regardless, okay? So, in other words, you not paying taxes has zero to do with somebody else getting benefits, because they're just going to print money and accrue debt regardless. So if that's the case, where's the incentive to pay tax? You might as well pay less tax and then take that money and go and do what you think is good with it. And second of all, of course, governments are very inefficiently run, and so when you're putting enormous amount of money out and getting very poor results, California, talking to you, for example, not so great, right? Propose the most expensive high-speed rail per mile in the world, and one of the slowest, as an example, right? So, it doesn't really inspire confidence that, hey, this is great stewardship to give your money there. But that being said, if we just think of it globally, I mean, it's 2.6%. Okay, it's higher. It's not great, but it's not really that shocking as a particular proposal, and I don't think will make the U.S. any less competitive. So probably is not going to be a deal breaker for whether people stay or not. So yeah. Now the next is tax capital gains as ordinary income over $1 million. So this is actually ideologically one that I kind of agree with. I mean, my basic view is that we want to optimize for kind of a meritocracy, right? You want to be in a situation where the market forces and kind of the value that you can generate within the market determines how much money you have, not the tax system. And so I think the US tax system in particular, since we're talking about that, is way too complex. You should strip it down to be much simpler. You shouldn't be having to spend a lot of money on tax planning. You shouldn't be able to get a huge advantage by tax planning. It should basically be simplified. And one of the ways that we're talking about simplification is in terms of where you make your money, whether it's from capital or from earned income. It seems bizarre that you would, for some reason, tax capital at a lower rate than you would tax earned income. Realistically, you're kind of disincentivizing people to work. You want to kind of encourage people to be productive and earn income, etc. Although, to be fair, I don't know that there's a massive incentive in that way. But at the same time, I don't think there's a huge disincentive to invest if the capital gains rate are higher. So realistically, ideologically, makes sense that you would tax capital gains in the same way as you would tax earned income. However, then they go and they say qualified dividends should be taxed the same. And this, I think, is a huge mistake, because the whole principle for why dividends should be taxed lower is because the corporation has already paid tax. So just really quickly, for people who don't understand, normally if a company makes money, the owners have one of two ways they can pay out distributions. One is as salaries, which will be 100% write-off for the company, but fully taxable to the individual, or they can keep the money in the company, pay tax as a company, and then pay out a dividend. And so the idea is supposed to be that these are equal. So there's no tax planning around it. You don't have to think, well, should I pay out a dividend or should I pay out salaries? That theoretically, this should be the case, right? And so if you say, well, hey, we're going to tax dividends at the full rate, but we also had to pay corporate tax, then it actually does make a difference, So that's not very sensible. So yeah, I think worth separating out those two. Now, you can say, okay, well, in the case of passive holdings of Fortune 500 companies, et cetera, but realistically, you're kind of doubling this up. So anyway, that's the deal. By the way, note, this would put capital gains taxes at 50% in places like California for high income earners. The next thing is repeal of the step-up basis. Okay, what is the step-up basis all about? So this is the idea that when you die, and let's say you have a small business, your family inherits it, they end up in a situation where the fair market value of it goes to the point at which they inherited it. Okay, so you die, you pass something on, the cost basis for the person resets to the price that it was when they got it. And this basically allows them to sell it and realize a profit, right? If you don't do that, then you're in a situation where a lot of the value could be eroded. Is this a good thing? I'm not a big fan of inheritance in general. I think, again, I'm kind of like a merit guy. I'm somebody who believes, I had to more or less make it myself, and the people that I know mostly had to make it themselves. I don't really know that it's great for society that somebody can inherit hundreds of millions of dollars and, not have to make it for themselves. Now, the counterpoint to that is, well, does that mean you should give it to the government? And that one, I'm not so sure that I'm not really a big fan of giving money to the government. So there's this kind of thing. I think if I was probably in charge, I would probably do more to encourage people to do some sort of philanthropy, something with the money while they were alive and maybe even afterwards, rather than going into some sort of inheritance situation. There will be a limit in this of $5 million, so you can get a step-up basis on $5 million based on gifts, and then afterwards lose out. So again, not a big fan of inheritance, so not a huge fan of the step-up basis if you're talking about some sort of extreme. But on the other hand, the reality is, for a lot of people, this can set them up in a position that A, is really good, and B, it can be a big motivator for people who are making money. So it's unclear, if you were to take away that motivation that the money's going to be able to go to your kids, your grandkids, etc., how that changes your behavior. The other thing here that's worth being aware of is if you're in a situation where you take away this thing, people are going to try and game the system, right? Which then leads to all these other things. So I don't know if you really gain much or not. But anyway, that's the way that it goes. Next one, 20% minimum tax if you have $100 million. This is a terrible idea. So they call it a billionaire tax. It isn't a billionaire tax because it's $100 million, but it is based on the increase. It's basically a wealth tax because it doesn't require selling assets. If the asset value goes up, then you end up in a situation where you're suddenly taxable on that gain, which is ridiculous. It's a terrible idea, like really, really bad idea from a tax policy standpoint. Hopefully it doesn't pass. Then there's repeal the carried interest thing. So carried interest is really common in the hedge fund industry. kind of goes back to something similar about, should people be taxed at, again, it's you get capital gains rates on the income from something called carried interest, which is common amongst fund managers. Is it good that they get that advantage? I don't really think that it is. Realistically, if two people produce the same value in the marketplace, why should one get better tax treatment than the other? Okay, if you have an unpriced negative externality or something, that's a little bit different. But otherwise, we should be encouraged to go out and do the thing that is most effective in the market, not have that skewed by tax incentives. So we want to kind of neutralize those. So I'm not altogether against the idea of eliminating the carried interest exemption, or whatever you want to call it. Finally, repeal 1031. Okay, so for people who aren't familiar, in the US, they have something called 1031 exchanges. 1031 exchanges work where if you sell an asset and then you buy another asset that is a like kind, so for example, I sell a house, then I buy another house, that I don't have to pay tax in the interim. Now, this makes a lot of sense if you're talking about personal residences. They have some proposals in here to limit it to $500,000 for a single person or $1 million for couples and things like this. So for a normal person, for their home, I think it's very sensible, right? Like you have to have a home, you're transferring from one to the other. This definitely gives a tax advantage to people in real estate. The reality is real estate is very tax advantaged in the US, which probably partially explains why you have an enormous amount of wealth that has been built from a lot of people. I mean, the line that, most millionaires made their money in real estate and most billionaires made it in private businesses, it's pretty accurate, right? Just by owning a house, your house became worth a lot. You do that a few times with inflation, the value of your money is going down, the value of the property is going up, there you go, right? So are 1031 exchanges a good idea, bad idea? I mean, they've already repealed them for certain things. And so, for example, in the world of art, you don't have the ability to take advantage of this the same way you used to. Similar could be if they bring it in here. Again, it's hard to argue that if I sell one thing and I buy another thing, that somehow is different than if I sell another thing and buy the same thing, right? Like, I don't know that makes a lot of sense ideologically, and that it doesn't give some favoritism to certain types of transactions. So I dislike those types of things. On the other hand, for people to be encouraged to kind of grow their wealth, I think it's very useful, right? If you're in a situation where you can buy a property and you want to upgrade to a bigger property and you have the ability to do that, this is kind of sensible. And there's a bunch of cases where in the world of housing that probably especially makes sense. It creates turnover in properties that wouldn't otherwise be there. So you'd have to do kind of some more detailed analysis to understand the consequences of it and see. I find it unlikely they would pass that. So just in general, I think that billionaire tax probably won't pass. It certainly shouldn't. It's a terrible idea. Carried interest exemption, I mean, they've brought this up many, many times. Is it going to get through? Tough. Just because of lobbying, 1031 exchanges, I don't think that will go through. Maybe the top income bracket will go up. The thing about capital gains, I mean, that's been the Buffett rule for the last, like Buffett proposed that years ago. It was kind of famous how he went on TV and showed that his secretary was paying a higher tax rate than he was, and he made $90 million that year, and she made, whatever, $70,000 or something. So that, I think, probably has a bunch of support. The idea of the step-up basis going away, I think that one's tough to pull through. And again, there's kind of some complexities of how people will game it. So we'll see. We'll see what goes through. But obviously, you can see that there is an era where they're going after people with more money, a lot more. They try to make excuses where they say, oh, this doesn't apply to people who are, under $5 million. Well, there's a lot of people who eventually, over the course of their life, are going to be over $5 million. And I don't know that it's necessarily, I have a big problem with the fact that a government can specifically target a group of people and arbitrarily decide what they're taxed, and there's no real repercussion or protection against that. I think that's pretty draconian and pretty bad. A good example of this is, I think it's in UK, they're talking about doing a tax on energy companies because energy prices have risen. It's like it's called a windfall tax. It's like, should they arbitrarily be able to come and say, hey guys, you made a bunch of money, so we're going to take it? Doesn't seem reasonable to me at all. So anyway, Hope that helps. Give me your comments in the comment below, and I will look forward to seeing you on the next video.